Hello traders, Gary Wagner here, just after 10:30 in Honolulu, 4:30 in New York. It is Monday, June 27th, 2016, and we are looking at the Dow Jones Industrial Average trading under tremendous pressure once again today, although off of the lows. At the lows, we had this market trading almost 300 points lower, but still closing down 260 points, 17,140. That puts it off about 1.5% on the day. Whereas Dow Jones Industrial Average closed off about 1.5%. As you can see, we're looking at the E-mini S&P 500. That closed off about 1.75% lower at 1983. Tremendous downside pressure. We're going to want to look at the Standard & Poor's. We're also going to want to look at the dollar, crude oil, and definitely the British pound, because that is something that I believe might actually still be in play as we watch that currency under tremendous pressure. Let's take a look at our first chart. So traders, first chart that I do want to look at on today's show, daily chart, Dow Jones Industrial Average, and we have put in a 200-day and 50-day moving average first. Secondly, we have also added one basic fib retracement. Now, on the fib retracement, I am going from this low that was the last low we had. This is where we were in February, up to these most recent highs. I would say just following April, in which the market traded to a high of 18,159. When we do that, of course, we'll get different levels, 23, 38, and 50. And as you can see, the low that we hit today is below this particular fib retracement, the 38% retracement. The close, however, is at that particular level. Now, I would say that that could be potential support in the market, except for the fact that we have broken solidly through not only our 50-day moving average, but our 200-day moving average. And the fundamentals in the market really aren't indicating that we're going to get a slowdown in the selling. And definitely, there's been no technical indications that we'll get a reversal yet in the market. Now, I talked about the fact on Friday that this is going to present us with a buy opportunity in there. But right now, to me, it's goodbye home, goodbye car. I say that facetiously, but what I mean by that is it's much too early to even consider entering this market from the long side. The short side, I'm a little bit hesitant to. That's a different story, though, with the British pound because of the factors involved in it. I think there's still time to arrive at the party, so to speak, and to be able to participate in that move. But I think that the S&P, we want to see what it does here. As it moves lower, this market is going to take cues from the global scenario going on, and how all of this unwinds is really up in the air. This is something that has never occurred. So whether you're a fundamental historian or a technical trader, we're in new territory. And as such, we want to be A, cautious, and B, we want to realize that there's some phenomenal opportunities in the market, but we just want to be correct about doing them. Let's take a look at a British pound chart. So traders, talk about ugly. This is a daily chart of the British pound. I'm going to bring the market move into a reference point, and to do that, we're going to have to obviously add more time. But to do that on a daily chart, there's simply the chart itself gets too narrow, and so we'll have to convert it to a weekly, maybe even a monthly. But this is Friday's action. Take a look at this. British pound at about 150 to the dollar, now at about 132. And look at the tremendous drop that it had. Then we did have a little bit of covering come in, but then we opened much lower than the close on Friday, and we are still gapping lower at this point. So traders, to get a real sense or a real feel for the British pound, we really have to look at a monthly chart, because the last time this market had been at this price point or these lows came in at around 2009. If you recall 2009, that's when we had a tremendous recession crisis. That's when gold ran. That's when the equities markets came under pressure. That is this point here. But these are intra-month lows. If you look at open and closing prices, you're closer to 140 than you are to 132. but we've definitely exceeded that at this point and exceeded it on a closing basis. Now, here's what gets more interesting. If we want to determine when the last time this market severely broke through this price point, look at where we've got to go just in terms of a time scale. And that's, as I said, why I had to pull up a monthly, because we've got to go back to 1985 to see any point in time when this market genuinely breached these critical levels. Now, 140 has been an absolute benchmark in the British pound, and it's been that way for decades. And so now that we've reached this price point, we don't have a lot of data points until we get to this 110 area and below, but there's really not a lot of data points that we can look at for areas that it could move to. Again, we are in historical ground, but on a fundamental basis, my sense is that this market, meaning the British pound in terms of its relative strength or weakness to the US dollar, has got a considerable more room on the downside to go, because realize that as this referendum just passed last week, we're talking about a multi-year movement in which they're going to work things out and settle everything up and how they're going to do trade. All of the details, which is the devil is in the details on this one, without a question of a doubt. But that's going to be something we need to see how that unfolds. Those are going to be the trades that we want to look at in the upcoming weeks with trending markets. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.